So the fight, I think, between Web 2 and Web 3 becomes, can Web 2 basically steal all the best ideas of Web 3 except for the redistribution of the ownership, right? And that's the fight. That's the fight, right? And, for example, in gaming, right, in Web 3 gaming, the players own the game. In Web 2 gaming, the game owns the players, right? So, I think that that's a very simple framing. But I think that, we would love to create and build a future where people own the services that they use.
Hi, Miko. Welcome to the Open Metaverse podcast.
Yeah, it's great to be here.
Miko, just to kick things off, can you tell our audience a little bit about yourself and the origin story behind crypto gummies?
Yeah, absolutely. So, it's pretty simple stuff. So I've been here in Silicon Valley for about 30 years or so. I got my start in developer tools. So, I actually worked on the Java programming language team at a company called Sun Microsystems. So this was back in the 1990s, right? So it's definitely the birth of the first consumer internet. So I've been kind of kicking around Silicon Valley for a while, really got involved in developer platforms and open source software. So, really developer tools guy. One of the things that happened with the origin of my fund is that there used to be still is actually a publicly traded mobile gaming company called Gumi based in Japan. So this is actually created by my partner, Hiro now. And he basically has launched, I think, 3 game-focused venture funds, a dedicated XR, which is VR, AR fund. So he has one of those, and mixed reality, which is the new thing, right? And then obviously, we're actually working on the second blockchain fund. So we actually launched in 2018 a blockchain fund. Hiro now and my partner Ray actually were the founders, and then they came looking for a U.S. partner based in Silicon Valley, and I was a good fit for that role. So so I joined them pretty early on, and we started making investments. So I think just to make a long story short, tying it back to kind of things like Open Metaverse, we led one of the seed rounds into OpenSea very early. We were part of the seed rounds within YGG or Yield Guild games. So a number of, we definitely my partner having had this sort of profound background within the gaming arena has a very strong appreciation for the metaverse. Obviously he has invested in, VR and AR, including, titles like Beat Saber and things like that. So he's definitely knowledgeable about almost everything metaversal, including blockchain. So, I think for me, I'm blockchain only. The Gumi Cryptos fund is blockchain only, so my partner has knowledge. So we're able to do gaming things. We're able to do, other things. But, I think the fund itself it's not a game fund. It's not a, any other kind of a fund. It's really a blockchain fund.
Excellent, Miko. We'll talk about convergence between crypto, mixed reality, AI in a bit. But before I touch that, I remember we were speaking a few days earlier regarding a mass adoption of Web3. So in your view, what are some of the vectors or the pathways that will allow Web3 to basically go viral? Basically, everybody gets onboarded. What are some of those vectors, in your opinion?
Yeah, so the thing that's been fascinating is actually watching the fits and starts. And what I mean by watching the fits and starts is that when you look at a technology that's basically almost like pure communication tech. So if you look at the birth of the early internet, right? In a sense, there was this kind of fairly clean boom and bust, right? So the what I mean by the clean boom and bust is that really that there was an internet bubble, right? So there's an internet boom cycle, right? There was, hundreds of crazy applications, right? There were these crazy applications like pets.com, right? Which has had a kind of a pet that was a sock puppet, and they put an advertisement on the Super Bowl, right? And of course, pets.com failed, right? And there was another crazy one called Webvan. And their idea was, what if you could order your groceries on the internet and they would be delivered to your house? Like, what a crazy idea, right? That failed, right? So, it was too early, obviously, but there were other crazy companies like Amazon, Google, Facebook, all these things popping up, LinkedIn, and the rest is kind of what I would say is history, right? Very clean boom, very clean bust, right? And it turned out that in those eras, in the birth of the consumer internet, the bust cycle was the cycle that created the Amazons and the Googles and the right. So the you think it was the boom that created it, right? But really it was the bust that created the biggest megacorps, in the world. The thing that I think is incredibly complex about mass adoption in Web3 is that there are fits and starts, right? And one of the weird things is is that the crypto cycle is tied to Bitcoin, and it's tied to the Bitcoin halving cycle, which is a 4-year cycle, right? So it's a very, very weird kind of more foreshortened boom and bust cycle. So it doesn't create as clean of a like boom, bust, boom, right? It's much more kind of janky and it's a little faster paced, right? I don't think it's inappropriate because I do think that it's fast, but the thing that I think is a little weird about it is the effect on infrastructure, right? Which is that it generally doesn't take 4 years to build infrastructure. It generally takes 10 years to build infrastructure. So what's happened is that, so for example, when you think about how dominant Ethereum is, right? One of the reasons why is the kind of elegance of this kind of L1, L2 structure, which is that you consolidate in one cycle, you consolidate your L1, by doing something like converting it from proof of work to proof of stake, right? So that's a consolidation. And then you basically move things like venture investment up into L2. So now L2 is getting investment, right? So it's a much weirder, broken up thing. And the reason why I'm kind of talking about it in this way is that the other thing that's been incredibly janky about this development has been that the boom and bust cycle also correlates with things like fraud and scams, right? Which is that there were fraud within the consumer internet, right? Like there's the famous, Nigerian prince email scam, and there's many famous internet scams, right? So, but the magnitude, the depth, the size, the scope, the greed, the kind of trickiness, right? Like, the sort of the SBF class of scam, is so big, right? And that obviously produces a huge setback, right? So, so in a sense, like, in reflecting on mass adoption, and getting back to your original question, right? What are the vectors, right? So, in a sense, like we were hoping for things like a consumer mass adoption vector, right? But the problem with the consumer mass adoption vector is that consumers can be defrauded pretty scalably, right? So that's been tough, right? So in a sense, the next vector that we're thinking and the catalyst we're thinking on the financial services side is probably institutional regulated adoption. So we see, companies like BlackRock that are getting involved in things like Bitcoin spot ETF applications with the SEC, right? So we're seeing kind of ultra high quality, so-called real world assets, being, and I hate the term real world assets. And I think that generally when you hear it, you're hearing about ultra low quality real world assets, right? When I talk about real world assets, I'm really talking about principally things like stable coins, so financial trading. And then I think the other killer applications there are things like treasuries, government treasuries like US treasuries, right? So Ondo finance types of, assets, right? So ultra high quality assets, right? And then I think those form natural trading pairs with Bitcoin. So I would say that I think regulated finance becomes a huge catalyst because there are giant pools of institutional wealth that want exposure to this asset class, right? Obviously, that requires KYC. It requires kind of better identity systems, right? So there's still infrastructure that needs completion, but that's a big catalyst. The other one that I think is possibly also very strong is something like gaming. So I'm a big fan of gaming. I spoke with Neil Stephenson, who wrote Snow Crash and coined the term metaverse. I asked him point blank, I was like, what is a metaverse? right? Because I was curious to hear what his opinion was. And he didn't actually bite, but he did say the metaverse has to be fun, right? That was his little whack at it. And I feel like when you look at Microsoft, they're making a huge investment to buy Activision Blizzard. And in a sense, when you look at the pattern of the investment of the company, they know what VR is, right? They invested in HoloLens, right? So Microsoft they have the intellectual firepower to launch a headset, but they chose not to, right? And their attitude towards the metaverse is, oh, it's World of Warcraft, or it's StarCraft or whatever. All of their mindset is very wrapped around Activision Blizzard, and gaming, right? So I think, Stevenson and Microsoft agree that the metaverse is really sort of has to be fun.
So Miko, directionally, I will agree with you. With regards to treasury, I feel like the TAM over there is even bigger than US dollars, and we have seen Stables achieve amazing product market fit. Like, it's one application, like close your eye, this is the product that has achieved that. And I would even go as far as saying maybe 60-70% of the project that even launch a token, they do not necessarily need a token. They can have a SaaS business with Stables, right? So real world asset, I definitely agree with you on that. And also, interesting thing about gamers is they are one of those personas out there that basically, even if they like something, they will be willing to go through the hoops. They will be willing to endure all the user friction that's at the moment comes with Web3 friction, right? I remember I used to play Pokemon on my PC through an emulator. Like, the gamers can do weird stuff and walk. Yeah.
Yes.
Yeah. So
they will tolerate a
yes.
lot.
So that Miko, that just got me thinking. So since all of us are in crypto, do you envision a world where Web3 and Web2 coexist? Will there be an inevitable shift? Will there be can they thrive in parallel? I know one of your theses when we were discussing was applications that coexist or co-opt with Web2 and Web3, like coexisting.
So here's a fascinating thing, right? Which is that when you really, really scrutinize Web3, the thing that becomes kind of the question is, your question evokes a definitional concern, right? Which is that what's the baby and what's the bathwater of Web3, right? In other words, to me, the beating heart of Web3 is really tokenization, and it is decentralization, right? So it's a distribution of that token to different hands than what the SEC typically regulates, right? Which is stocks, right? Equities and these types of things, securities essentially, right? So if you look at traditional securities, the distribution pattern of securities is, are you a stockholder, right? So essentially there's this concept of the stockholders are owners of the business, right? And as the owners, they're the beneficiaries, right? So the thing that's interesting about tokenization is that tokenization sort of potentially redistributes the principles of ownership, whether that be governance over the means of production, right? Or whether it means kind of just being a pure economic beneficiary, of the activity of the network, right? So I guess to me, the thing that's fascinating about all those things is that it seems blatantly obvious to everyone, even Gary Gensler, that Bitcoin is not a security as a function of kind of really massive decentralization, right? So, so I guess what I would say is that, we already have an extant example of a utility that's effectively a, economic value storage mechanism, right? That functions, in a fully decentralized way. So, is tokenization and decentralization here to stay? It is, right? But the thing that becomes really a key question is, how essential are those elements to kind of the go forward plan? Because one of the things I see here is when you look at Web 2, right? Web 2 is sort of failing miserably, right? For example, I'll give you examples, right? So Mark Zuckerberg doesn't want to run a company called Facebook, right? He wants to run one called Meta, right? And it turns out that Jack Dorsey doesn't want to run a company called Twitter. He wants to run one called Block, right? And it turns out that Elon Musk doesn't want to run a company called Twitter either. He wants to run one called X, right? So the point is that all of the architects of Web 2 are sort of running away from their creations, right? Because they're broken and ugly, right? They're not working, right? So Web 2 is not serving people. I think the destructive, we've reached the very end of advertising driven internet, right? Where we're just at the end, right? And so the thing that I love what you were saying about things like SaaS, and I love what you were saying about things like how regulated, government recognized, bank recognized stable coins can be used to create not only just SaaS, but when you think about it, it's really about the API economy, right? Which is that, ultimately what will happen is that, probably the majority of commerce in the world is going to be B2B. And in fact, I think the purchasing decisions are probably going to be made by AIs, right? And so the AIs will be paying other AIs, right? And so the question is, what are they using? What are they using to pay each other, right? And to me, when you look at the older paradigm of API economy, they used to have this thing called Web Services Gateway, right? The Web Services Gateway would take care of authentication. You would call the API like a REST API, right? And what would happen is that there'd be some kind of a bot who is responsible for counting the API calls, right? And then sending you a bill to your accounts payable, right, department, and say, oh, you owe us for the amount of API that you used, right? But and then you would pay in US dollars on net 30, right? All of that is just unnecessary, right? Like what you want is machines kind of having in-band payment, right? So I guess what I'm really poking at is I think the thing that's exciting is that beyond SaaS, right? Because SaaS is really the idea of human to machine online service that you pay for, right? So the thing that's really interesting becomes, well, what about machine to machine and all these other kind of configurations? But what I really wanted to kind of point at is that this kind of thing can also be co-opted, right? So the co-optation becomes, gee, is Elon Musk going to add non-crypto payments to his system? He will, right? Is he going to add creator incentives to his platform that are sort of helping the creator economy? He will, right? So basically, is he going to add end-to-end encryption to all of his direct messages? He will, right? So the point is that is it possible that the Web 2 people will steal all the best ideas of Web 3, but leave tokenization and decentralization out, right? So in a sense, I'm going to argue that the tokenization and decentralization and the redistribution of the ownership is the baby, right? And a lot of the other things could be bathwater. You could throw them out, right? But in a sense, the fight, I think, between Web 2 and Web 3 becomes, can Web 2 basically steal all the best ideas of Web 3 except for the redistribution of the ownership, right? And that's the fight. Right? And I think the sort of Web3 purists are we'd like the ownership to be redistributed. We would like users to become owners, and not to be owned, right? So the quip that I like to say is for example, in gaming, right? In Web3 gaming, the players own the game. In Web2 gaming, the game owns the players, right? So I think that's a very simple framing, but I think that, we would love to create and build a future where people own the services that they use, right? And because to me, that ownership is so deep, right? Because when you go back to Warren Buffett, he says things other than Bitcoin is rat poison. He says things like, invest in things that you know, right? So the thing that's really interesting is people know the services that they use, right? So why should they not be investors in the services that they use? And why should they not be stakeholders? Why should they not have governance rights? Why should they not be a beneficiary of the growth of the things that they've invested their time and expertise into? So that's my impassioned plea for let's redistribute ownership and let's continue to go down the path of decentralization.
Exactly, Miko. That's why we're here, right? That's why I'm here. And funny story, I recently, a few days ago, sold some of my ETFs that I own because I wasn't following the market. And I basically took that money and invested in few L1s because I know with those L1s, I can validate the network and take participation in that network by securing it. And I like those networks because I use it on, let's say, a bi-weekly basis. So I exactly resonate what you're saying there. On top of that, I was also having this argument with my friend, I think a couple of weeks ago, where I was trying to make the argument that some of the features of Web3 are actually not a bug, they're a feature. So for example, if you look at current business model, they rely a lot on advertisements. And given the dexes we have, given the take rate we have when we interact with every dApp, I think those businesses are amazing for AI, because advertisement model just wouldn't recognize how many AIs are there, how many humans are there. And this bug became a feature, right? This bug became a feature where the take rates we have actually allows us not to only be sustainable, but also kind of future proofs ourselves with machine to machine transactions and machine to machine revenue generation.
Yeah, I definitely love thinking about sort of the future of the space because I do think AIs are going to be ever more prevalent. Tell me about your perspective on the kind of AI revolution and how it sort of impacts Web3.
So my view, yeah, very, very interesting. The way I'm at least thinking about this right now is I don't feel like I have the edge. And the best way for me, at least, to kind of play this is to kind of invest in shovels of it. So I feel like the AI model training, it will require exponential compute requirements. So as more people train AI, either for and even for inferences, the requirement for compute is going to be massive, and there is going to be verticalization where each player, even incumbents, will try to specialize in one domain. So I think there is a opportunity in terms of AI and crypto playing a big role through things like decentralized compute. So that's one area I think intellectually I'm very, very fascinated by. The other area I'm fascinated by is how to give AI agents a wallet. And what I just described, the AI agent through account abstraction, maybe through the new NFT standards, ERC standards, your AI is actually a wallet. And
There's tremendous work being done around that at Lit Protocol, right? So Protocol has kind of programmatic key management through multi-party computation, right? So in a sense, they're kind of building sort of really like a HashiCorp vault system for the decentralized system for kind of key management, right? So the thing that's super interesting is how programmatic it is, right? So I agree with you that account abstraction is definitely the meta pattern, right? But the idea becomes that if you can reposit the key, right, then you can absolutely give the AIs wallets, right? Which is, I think, super fascinating to understand what can be built, right? Because at that point, the AIs can start kind of doing really, really interesting things. They can buy services from each other. They can buy compute and storage. They can start executing and delivering value, and they can start kind of playing economic and commercial games, which I think is quite fascinating.
Miko, for our audience, can you demystify what is MPC?
Yeah, absolutely. So MPC is pretty simple. It's this concept of so-called multi-party computation, right? So, one of the really interesting use cases, so there's multiple use cases for it, right? But one of the use cases really becomes this kind of idea of key management, right? Which is that effectively the problem of multi-party computation is really simple, which is basically that you want multiple participants to effectively participate in a compute function, right, in a trusted way. So the compute function can actually be something that involves things like key sharding, right? So that's a particularly useful, so that really becomes this paradigm that enables you to do things around privacy and around security, and create sort of multi-signature, patterns, so you can create lots of really interesting custodial patterns that I think are needed, right? Because I think right now there's sort of this concept of like binary custody, right? So binary is basically like, well, you have to decide whether you want self-custody, in which case you run the risk of losing the key forever, right? Or being hacked, right? So you have to be the best custodian, right? Or you rely on someone else's custody, typically an institution, right? And if you rely on their custody, then you can also be really hosed, right? Whereas like the use of something like multi-party computation will actually allow the key to be sort of broken into pieces, right? And when you combine the pieces, then you can, then have, rights. You can establish kind of a complex pattern of rights and access controls, right? So that becomes exciting. I think one of the cautionary tales in MPC is that there's two layers. Like one layer is the idea of compromise of an individual system, right? But which is an individual wallet. And I think, but the other one is really potentially the most dangerous, which is compromise of the entire MPC system, right? So like MPC systems often require sort of themselves a master key that they use to encrypt and encode all user keys, right? So a lot of times this has to do with this kind of concept of a summoning ritual or this concept of a secure ritual, right? That allows for things like randomness generated from lots of different users to sort of, people call this like a ceremony, right? So the idea becomes that if the initial random numbers are non-random, right, then you can potentially compromise everything on the MPC network, right? So I think that's a vulnerability. So I think, obviously it isn't the panacea. That's probably the largest scale cryptographic attack on MPC is basically compromising the summoning ritual. But but I would say that like we're going to need solutions like this, right? Because I think pure end user custody is sort of provably not good. I think Bitcoin has had major millions of Bitcoins lost, I think, reported. So it's difficult to say the exact number, but we definitely know that there's millions of lost Bitcoins, which is a staggering amount.
And Miko, earlier you highlighted some fascinating use cases, like especially on access control. And I think Lit protocol is also introducing this thing called Lit action. So perhaps this could be an opportunity where we talk few of your portfolio companies like Lit protocol, like how they're using MPC and perhaps Credo as well.
Yeah, absolutely. So, we see MPC as a pretty big thesis for us, the utility of it, as a cryptographic primitive. So we are invested in Lit protocol. We see actually Lit protocol being very, very kind of developer focused. So there's tons of applications that are now being built on top of Lit protocol and getting all of the really complex use cases around custody, essentially for free from the Lit protocol network. So, if you're a developer, I definitely encourage you to check it out. They're doing a wonderful partnership with Collabland, which allows for kind of things like Discord wallets and Telegram wallets and kind of really, very, very simple and user-friendly wallet paradigms, right? So I think that's exciting. I think the frontier that we describe also includes institutional custody, which is a very separate use case, which we think is well handled by Credo networks. We were the first external check in Credo, and their approach is that, as I mentioned, this concept of access control and complex access control. Things like financial institutions actually have really interesting use cases like around-the-clock trading. So around-the-clock trading basically becomes, we have a key that provides access to trading, and during certain business hours, it rotates to London, and then it rotates to Hong Kong, and then it rotates to New York, and so like these kinds of institutional use cases are really, really interesting, and obviously there's things like risk management frameworks, right? So there's things like, if you look at the rogue trader Nick Leeson, he destroyed the multi-100-year-old Barings Bank, through just trading and doubling down, right? So he had unlimited risk exposure, right? So there are institutional use cases where it's sort of like, no trader can exceed X risk threshold and, this kind of thing, right? So like there's a lot of really cool computational access control paradigms you can build that are sort of institutional use cases on top of multi-party computation, right? The other thing that's really fascinating is that if you have the key to a wallet, you can actually create almost like a layer 2 on top, right? Where you can actually take a wallet, like let's say you take a wallet with 1 Bitcoin in it, right? Basically passing one of the MPC key shards around basically gives you a internet wire speed way to transmit essentially what's a legal bearer instrument, right? So then the person produces the bearer instrument and says, hey, I'm the rightful holder of this key fragment, right? And then what happens is that key fragment holder can then produce appropriate KYC that enables them to withdraw the asset, right? So it's what happens is then you have additional stakeholders that need to multi-sign in order to get the funds out, right? So it's a very cool kind of institutional and regulated use case, right? So I guess what I'm describing is that when you look at institutional custody, Credo's super interesting use of multi-party computation. We also see privacy use cases for MPC. One of them we invested in is called Keyless, and Keyless actually does a decentralized biometric authentication. So whether it's a face ID or whether it's a fingerprint, thumbprint, these kinds of things, these biometric measurements, I think, are super sensitive, because if an adversary steals your fingerprint, right, they can actually reproduce the output of a device that's reading your finger, right? So if they're able to reproduce that output, then it becomes, they've effectively stolen your biometric identity, right? Obviously, there's lots of safeguards. You can have things like readers that have their own private keys, right? So if you have an embedded fingerprint reader in your phone, it's likely interacting with a security chip, so there's definitely like safeguards. But to me, the thing that is the biggest threat is if you have a biometric database and somebody steals all the biometrics, right? So one of the cool things about multi-party computation is that it enables you to decentralize the storage of biometrics. So, in a sense, this is a pretty exciting frontier, especially as we start to see AI bots appearing by the billion, right? So as billions of AI bots flood the network, we see an increased need for Sybil resistance and kind of a proof of humanness. This is stuff that I think WorldCoin, which we're not invested in, it seems to be addressing through their kind of iris scanning methodology. We don't actually have a high degree of confidence that a kind of effectively proprietary stack eyeball reader will compete effectively with things like Apple Face ID or, things like the Android, fingerprint and Face ID systems.
So Miko, apart from MPC, ZK Tech has also been kind of in the foray for privacy. What are your thoughts on that? Like how you kind of bifurcate these two big cryptographic primitives?
Yeah. So the thing that's really interesting about zero knowledge, right, is that if you kind of scratch the surface of this idea of zero knowledge proof, right, the thing that becomes interesting is you run into kind of this simple mathematical proof called the millionaire's problem. I won't go into it now, but it's really a simple idea that what's happening is people are wanting to get answers without revealing the information. Right. So this is a pretty interesting thing because it spawns multiple use cases, right? I would say that the two killer applications on the zero knowledge side are, I think, first and foremost, the idea of building cross-chain proofs, right? So cross-chain proofs are pretty exciting because it helps to solve fundamental problems around scalability, right? So I described earlier the Ethereum L1, L2, right? So, a couple of really powerful paradigms for acceleration of infrastructure related to blockchain, on-chain transactions, right? Obviously, one of them is this very simple paradigm of optimism, right? And optimism is more like a credit card, which is sort of like, okay, well, we have risk that transactions are fraudulent, but we also have sort of slashing and staking mechanisms that can kind of protect us from these smaller risks, right? So that's sort of optimism. But when you look at the other kind of major classes of rollups that provide performance, right? ZK rollups are actually, producers of mathematical proofs of the state of stuff that is off-chain, right? So people describe kind of cross-chain and they describe L1, L2 relationships, right? All of that stuff is effectively transferring state from one chain to another chain, right? One chain that's called an L2, to a chain that's called L1, right? And so that cross-chain state proof becomes sort of a bread and butter, and a lot of those state proofs are zero-knowledge proofs. I think the other class of things that I think have been fruitful in the frontier of zero-knowledge proofs, obviously, are the identity and privacy applications, right? Because you can do things like, prove that you're over 18 without revealing your birthday. These are the most kind of simple, obvious, primitive ones. But I do think that the more sophisticated ones are kind of preventing large corporations from doing data theft, right? And, coming up with sort of ways to preserve people's privacy, but at the same time deliver them viable services like AI, so you can protect people's data, and you can use ZK proofs to sort of ensure that people are doing the right things, even though they may not be able to tell you exactly what it is that they're doing for usually commercial reasons.
So, Miko, I think you guys have invested in one of the project called Lagrange, which is doing ZK-based cross-chain
Yes.
communication. Is that
Yes.
so?
Yes. So we're investors in Lagrange, and like Lagrange is very, very exciting. They're using very, very sophisticated cryptographic mechanisms to develop multi-chain oracles, right? So they're able to prove state simultaneously across multiple chains, right? Which I think creates really, really exciting applications around things like decentralized exchange, multi-chain price discovery. There's all kinds of really, really interesting applications that arise once you have ultra reliable cross-chain, right? So the thing that I think people are wondering is they're wondering about things like the diversity of blockchain, right? And I think one of the things that Lagrange is pursuing is a world of integration, right? So I think in a world of integration, it means that multiple blockchains can happily coexist, right? Because you can really rely on sort of what happens is obviously you create this kind of cryptographic proof-driven chain of chains, right? So I think that's an exciting future. Obviously, there's other extant efforts to create a chain of chains like Cosmos IBC, but they really rely on very different principles. And I think the Lagrange approach is exciting because it really has to do with emerging cryptographic math, right? So it has to do with really bleeding edge stuff. Their chief scientist, Professor Bhattis from Yale University, is very well published on sort of deep tech cryptography. So, he's definitely advancing the whole field and is really contributing richly to the field of cross-chain proof.
Yeah, this is one of the reasons I love crypto. Like different folks are working on kind of similar problem, but like different approaches. I've seen MPC being used for cross-chain communication. Now we are seeing ZK. We're also seeing like, I think with layer 0, there's an oracle and a relayer and a kind of like different mechanisms altogether. So one thing that just keeps me excited about the space, new problems being solved with like new innovative way, and that's what keeps me that's what fascinates me about the whole space.
Yeah, it's fun because in a sense, like, we really have to kind of keep our eyes on these emerging capabilities, right? Which is that it's fascinating to see how the academic world of cryptography has sort of advanced and how these new advancements, right? Because when you think about this idea of like zero knowledge proofs, right? Like there's a wonderful kind of tutorial from MIT where you can prove that you can successfully identify Where's Waldo game, so you can definitely indicate that you know where Waldo is, and you can prove that you know where Waldo is without giving away where Waldo is, and that's a cute game. But I think the thing that's fascinating about this is that what's happening on the internet is the birth of a new creature, which is the AIs, right? And so the thing that I think is amazing when you start to look at things like deepfake videos, you start to look at things like distributed denial of services, you think about botnets, like you think about kind of fake users, things like, Elon Musk made a big deal about fake Twitter users, so when you start thinking about the prevalence of fakeness, right, I think AI is going to exponentially lower the cost of fakeness, so I think that what happens with AI is that the counteracting force at some level is cryptography, right? That cryptography contributes realness, right? Because the idea of a cryptographic proof is what makes you sure that what you're seeing is real, right? And the thing that becomes really, really interesting is that if you can create a set of reliable mechanisms that involve cryptographic proof, right, then at least you can kind of reverse engineer a rationale for believing in things, because I think, over the years, things like social media have just gotten worse and worse and worse in terms of can I believe something that I'm seeing, right? And I think today the deepfake video technology is definitely sort of proven that there are things that you can see that look real that never happened, right? So that's a very disturbing state, actually, right? Because anything that's online, you can question it, you can say that's not real, right? And I don't know, that's a fairly degenerate state for society, right? So I'd love to see the emergence of strong cryptographic proofs. A lot of the proofs of whether something is real or not are proofs that involve attestation, but I still think that there's some reasonable attestations. Like, for example, you could have cryptographic signing at the level of the cell phone manufacturer, right? So you could say like, well, the Apple private key has certified that this photo hasn't changed and the data of this photo hasn't changed since it was taken, right? It's, we have a cryptographic signature from the atomic clock at Lawrence Livermore Laboratory that attests to the time that this was taken, right? And we have we've taken a hash of this photo. We've actually placed it on this public blockchain, right? And so it's immutable, right? So like we can now look at this photo and be like, well, we think it was taken from this specific iPhone, right? It's signed by the iPhone, right? It's the timestamp is signed by the atomic clock, like, so it's sort of like, could a state actor like the United States falsify that, like with a backdoor? Like possibly, right? But like, that's a high level threat actor, right? Like, so the question becomes, and we can get into conspiracy theories, right? I mean, we could obviously be like, oh, well, that photo of like, that photo was doctored by the FBI or whatever, NSA. And obviously the question becomes, well, what's the burden of the proof, right? Like if it's a picture of your dog, and it's like, oh, your dog is okay, see, here's a picture, right? Like, you're like, oh, the NSA backdoored the photo. Like, it's sort of, I don't know. I guess I'm saying that there's levels of conspiracy, right? Like extraordinary claims require extraordinary proofs, right? So I guess what I'm trying to say is that, like, there are going to be proofs that are good enough for day-to-day use, right? They're gonna be cryptographic proofs where people are gonna be like, that's good enough. Like, I see the check mark, like Twitter check marks are
Miko,
definitely not
about
a proof of
Twitter.
anything at all.
Literally about
But
Twitter, when Mark Zuckerberg, no, not Mark Zuckerberg, Elon said that I'm going to fight Mark Zuckerberg. For 5 minutes, I thought that was not real. I had to Google and be like, okay, is this happening?
It seems totally unreal.
Yeah, so I think that's why we need crypto. Like even in that case, we need crypto. If Elon signs that, okay, this was a transaction signed by myself, not by my manager, that actually means I'm interested in fighting, right? So I think these types of things that are emerging on internet, I think will make our life easier if they had cryptographic proofs or if they were signed.
We definitely want to see. We want to see, like, okay, like what are the systems that are backing up these statements, right? Like, did you do it from a biometric device, and like, how can we be sure that this is actually the person making the claim, right? And so I think increasingly we'll have to rely on cryptographic systems to give us that assurance, right? And obviously, again, like cryptographic systems can be compromised, right? So I'm not saying it's a panacea. I'm just saying that it has to be better than today, because today is bad.
So, Miko, apart from this, I think you also asked me this question in terms of the convergence between AI and crypto. What are some of the other areas you see this convergence? And not just AI, maybe some of the other verticals out there, maybe mixed reality. How do you kind of see all of these puzzles like fitting in and converging?
Yeah, I mean, the thing that's fascinating about convergence, right, is that convergence is challenging because it requires timing around different technologies, right? So the thing that's really interesting about a seismic technology like AI is that part of the way to reason about investment in AI, I think you said something very, very subtle, which is that, like, you're not sure where your edge is in terms of making the investments, which I think is very wise. So I think it's very wise to kind of have people really focus on what they know and invest where they know, right? But I do think that something of the scale of AI is important, right? And obviously, we've seen really simple heuristics like next symbol, like when a ChatGPT is trying to determine what the next symbol is, right? We've determined that scales like crazy, right? If you throw compute and data at that thing, it will start to model things that we didn't think could be modeled this way, right? Which is amazing, right? It can do crazy things like it can, if you do next symbol computation over chess games, like ChatGPT can learn how to play chess, right? Which is sort of like, how does it knowing the rules of chess just by trying to figure out what the next utterance should be? Like what, so it's sort of someone who's like, what should I say? What should I say? Right. It's like, you should say like, I'm going to move my queen forward, right? Like that's what you should say, right? It's kind of like, and the whole rules of all of the games of chess have been digested by this machine now, right? So I guess what I'm really claiming is that we're at such a fruitful time in something like AI, right? That it feels like the best way to invest is not necessarily to run out and invest in an AI company directly, but really to think about how seismic of an impact will it have on society, right? So for example, I was talking about things like identity, Sybil resistance, botnets, right? So like maybe there's opportunities to invest in verified, identities and Sybil resistance, right? So I guess to me, part of my mindset is trying to measure the size and the timings of things, and I think as a venture investor, I'm definitely interested in the 4 to 7 year time frame. I mean, as a kind of science fiction fan, I'm definitely interested in like far future time frames. I'm super interested in things like nuclear fusion, which I'm convinced isn't in the 4 to 7 year window, although I'd love it for it to be. Commonwealth Fusion thinks it is, but I disagree. Just to step way back from that, part of my logical conjecture is that the emergence of viable commercial nuclear fusion would be such a seismic impact on society that if you were a U.S. president, you would ask the head of the Department of Energy when it's happening, and if it's going to happen during your administration, you would try to take credit for it, right? So you would create this kind of moonshot fusion government program, and then you would take credit for some commercial advancement, right? So because that isn't happening, I'm conjecturing that it's not one administration span or even two away, right? So I just feel like that's where we are. We are where we are. But like, so I guess what I'm trying to do then is sort of reason about these timeframes, and try to understand the patterns, right? So I would say that in terms of convergence, like convergence is pretty exceptionally hard. One of the things that happens is that you have convergent startups. So you have a convergent startup that's like, oh, I want to do, mixed reality with AI, with blockchain, right? And so the problem with those is that then they become beholden to the business timing and emergence of multiple major threads at the same time. So if any one of those major threads doesn't appear when they need it to appear, then as a company, they fail, right? So that makes it exceedingly hard, right? Obviously, these convergent startups do potentially create incredibly high returns if they're correct about the business timing of every single major macro, right? The other thing that I think happens too is that there is an attraction to playing the buzzword bingo game. And so, there are kind of low conviction entrepreneurs that sort of chase buzzwords. And I think that's another danger or trap, right? So I think that to me, it's better for you to invest in a pure play that kind of maybe has sort of an interest, is maybe opportunistic and open-minded about the other track. So if you're an AI company that's opportunistic about blockchain, or if you're a blockchain company that's opportunistic about AI, that's better, because then you're doing your core business. You're embracing the risk of your core business, which is maybe blockchain won't work, right? But then if blockchain does work and then all of a sudden AI starts working, you're actually in a neat spot because you've built your core business and you're open-minded about the adjacency. So that thing works for me. I think the pure convergence plays are hard, where it's sort of like my thing won't work unless all these other really major things work in the time frame that I want. So that's scary.
Because this got me thinking, maybe so instead of playing that convergence, maybe one can focus more downstream. So maybe blockchain is the way to kind of play this convergence, where let's say if we have to prove everything is a deep fake through that thing living on a blockchain or people signing, maybe identity, maybe blockchain, those could be the primitive to kind of play those,
yes,
like as a pick and
yes.
shovel.
I'm a huge watcher of Microsoft. I think they're an incredibly clever company under Satya Nadella, and like they're making tremendous investments into building decentralized identity technology, right? And they're buying like Activision Blizzard in gaming, and they're investing in OpenAI, right? So like they are very smart about like the future, right? And what the future may hold. So I think your idea of like maybe the way to invest in AI is to invest in certain aspects of blockchain, right? Things like cryptographic provers, ZK provers, things. So these types of like themes within blockchain become much more accessible in a world that's impacted by AI, right? I think gaming is impacted by AI in the sense that like gaming is sort of the last ultra scalable AI resistant business, right? Which is that, if a billion people, knowledge workers lose their jobs, right? They could potentially create entertainment, and they'll most certainly consume entertainment, right? So, so I think that will be pretty endless. And they may use AIs to create maps, and they may create in-game items, and so there may be like AIs will be involved and will probably take away jobs in entertainment. But I think there will always be jobs in entertainment because there will be more and more because people want more and more entertainment. Like if they don't have regular jobs, they're going to want more entertainment, and more people will become themselves entertainers in various ways.
So Miko, I'm cognizant of your time, and to kind of conclude the podcast, how can our followers follow you and kind of get the download of your thinking, maybe through your podcast, maybe through your Twitter, maybe through your writing? Please kind of feel free to.
Absolutely. All of those things, you can jump from my website, miko.com, miko.com, and you can find my Twitter there, my LinkedIn, you can find my YouTube podcast. So you can find everything right off of miko.com.
All right, Miko, amazing. Thank you so much for coming. I thoroughly enjoyed our conversation on different facets of blockchain and even AI. So again, thank you very much for coming.
Thanks so much.
This podcast is for information purposes only and should not be considered as financial advice. Any opinions provided in this podcast reflect the views of the speakers only.